$0. That is what Elon Musk paid in federal income tax in 2018. Legal. Jeff Bezos, $0 in 2007. George Soros, $0 for 3 consecutive years. Not criminals, not hiding in the dark, using a system, a 3-word system. Buy, borrow, die. This is not a conspiracy. This is not a loophole someone accidentally left open. This is a strategy, designed by a law professor, taught in universities, used daily by the richest families in America. And by the time this video ends, you will understand precisely why a nurse paying 22% tax and a billionaire paying 0% are both operating completely within the law. And why that is not an accident. Let us go through this slowly. Step 1. Buy. The first rule of this strategy is simple. Never earn money. Instead, own things that grow in value. When you earn a salary, the government sees every dollar. They take their cut immediately. This is called ordinary income tax, up to 37%. But when you own stock that grows in value, you pay nothing. Not yet. Only when you sell. This is called unrealized gains. Wealth that exists on paper. Wealth the IRS cannot touch. Bezos built hundreds of billions in Amazon stock on paper. Taxable? 0. Step 2. Borrow. Here is where it becomes frustrating. A billionaire does not sell their stock to buy a yacht, or a mansion, or fund their lifestyle. They borrow against it. They walk into a bank. They say, "My stock is worth $1 billion. Lend me $100 million against it." The bank says yes, immediately, gladly, because the collateral is the asset itself. Now listen carefully. A loan is not income. The IRS does not tax loans. So the billionaire just received $100 million, completely tax-free. They spend it. They live on it. They buy more assets with it. And the original stock? It keeps growing, untaxed, while the loan sits there, charged at 2 or 3% interest. Lower than inflation. Effectively free money. For people with enough collateral to ask for it. Step 3. Die. This is the part that most people cannot believe when they first hear it. When a billionaire dies, their stock is transferred to their children. And something happens to the accumulated gains. They disappear. This is called the stepped-up basis, a legal mechanism that resets the cost of the asset to its current market value at the time of death. All the gains that accumulated over decades? The IRS erases them. The children inherit clean stock, with no embedded tax liability. And the loan the bank gave? The estate pays it off using a fraction of the assets. And then the cycle restarts with the next generation. Buy, borrow, die, repeat. Forever. Now you are probably thinking, why don't they just make this illegal? Some tried. In 2025, U.S. senators introduced the Fair Trusts for Fiscal Responsibility Act, specifically targeting this mechanism. It didn't pass. Here is why this matters to you specifically. The middle class saves. The middle class earns wages. The middle class pays 22 to 37% on every dollar, and then watches that money lose value to inflation, while a different set of rules applies to people with the right assets. This is not envy. This is not politics. This is a system with 2 different rule books, and the one you are using was written for you. The other one was written by people who write laws. Here is what you now know. Billionaires do not get rich by earning more. They get rich by never triggering a tax event. Buy assets, never sell. borrow against them, pass them on at death with the tax basis reset. 3 words: zero income tax, perfectly legal. In the next video, we go one layer deeper. We show you how the Dynasty Trust works, the legal structure that allows one family's wealth to compound untouched for 100 years, while taxes do not apply, while courts cannot touch it, while your children's children are still paying income tax. Subscribe, because the next video is the one they do not want you to watch. Shadow Ledger HQ. Now you know.